What is the difference between term insurance and whole life insurance? My name is Darius.
And I'm Carmen.
And we are the founders of Wealth Nation.
So we realized that we have talked to you before about term and whole life insurance, but we were addressing the comment that someone made when they say buy term and invest the difference. Mm-hmm. So we wanted to come to you today to talk about the differences between term insurance versus whole life insurance. Mm-hmm. So I'll get started with term. So term insurance is exactly what you hear. It's for a term, meaning a specific period of time. We traditionally see term insurance policies lasting about 10 years or 20 years time.
Depending on the age of the individual.
Yeah, depending on the age. And what that means is you buy life insurance for that set period of time, and if something were to happen to you, then the insurance company will pay a death benefit to your family. Mm-hmm. Now, with term insurance, the things to keep in mind is there's no benefits that you can utilize. There are no benefits that you can utilize during your lifetime. So you're simply paying into this policy every single month or every single year, however your frequency is set up, for this death benefit that's on the shelf. Mm-hmm. Now, the reason why the insurance companies are able to keep term insurance so cheap is because they know nothing's going to happen to you. Because when you do a physical exam for insurance, they have to get your urine, they have to get your blood, and they ask you a whole heap of medical information regarding you, your family, and everybody in between, mm-hmm. just to make sure that you are insurable. So the insurance company insures you because they know that nothing will happen to you unless it's some sort of catastrophic accident. Right. So that's why they're able to keep the term insurance so cheap. So you're basically paying into this every single month, like how you would do your car insurance or your homeowner's insurance. You're paying for something in the event should something happen to you. You're paying for coverage in the event should something happen to you.
Right. And before I get into whole life, I mean, whenever you buy insurance on your life, they're going to know every detail about your health history and your family history. So they're insuring you based on the fact that they know, based on your blood work, your urine sample, that as far as being sick, you're relatively healthy. They don't insure people who aren't healthy.
Correct.
So when it comes to whole life insurance, there's about three things that I want to point out. The first thing is the fact that whole life is for your entire life. And it falls into like the category of the permanent life insurance. And I say category because there's other policies that do fall into permanent life. Yeah. And again, it lasts from the age you are now until you're about 121 years old, mm-hmm. or 100 to 121. So somewhere between there's a strong possibility that you may pass away. So when that happens, you pass on that death benefit to your beneficiary.
Correct.
The second thing I want to point out is the savings mechanism inside your whole life insurance policy. Every time you make your premium payment, there's a small percentage of that payment that is building up tax-free inside your policy, which is called cash value. So that's another perk that is added to your whole life insurance that you may not necessarily have with term. Now, on top of the cash value, there's the third thing, which is riders. It's additional things that you can add to your insurance policy in the event that you want something different. So there's about three things that I want to point out. It's the terminal rider, which if you have a terminal illness as you have your insurance policy in place, the insurance company will provide some of your death benefit for your medical expenses. And the same thing works with chronic rider or chronic illness rider, where if you have a chronic illness, some of those expenses can be taken care of by the death benefit of your insurance policy. Mm-hmm. Now, the last rider that I want to point out is the paid up addition rider. The paid up addition rider is what you can add to your insurance policy to boost your cash value. Now, that's a whole nother topic, but that's one of the things that we wanted to share with you as far as riders and additions that can be added onto your whole life insurance policy that may not that isn't possible with your term policy.
True. Yeah, just to again continue to compare the two, mm-hmm. term insurance is just basic insurance on your life. So if something were to happen to you, your family gets paid out the death benefit, but only in that term mm-hmm. that time frame.
Yep.
And then if you are outside of that time frame, your premium significantly increases. It goes from cheap to super expensive as soon as you get out of that time frame. Now with term insurance, if you do it for 10 years and let's say come year 11 you want to get more insurance, the thing you have to keep in mind is you're now older. So it's going to be a little bit more expensive for you to get insurance because you're a little bit older, and who knows, 10 years from now something could have happened with your health and maybe you could or could not be insurable.
Right.
So with term insurance, again, it's for a specific period of time, and outside of that term your insurance significantly increases. This is something that people don't understand because at first they just see the affordability and they're like, yes, I have insurance. But come 10 years from now you're like, oh crap, what am I going to do?
Right.
Want to make sure that I point that out because that kind of happened to us. We started with term insurance because for us that was the right thing to do. We needed insurance on our lives. We needed to be responsible adults.
Right.
So we got term insurance. And we just kept it at that.
Yep.
And also the financial guru that we were following at the time told us that we needed to buy term insurance. So we said, whatever he said, we're going to drink that juice and do what he says to do. But we didn't really do any other research outside of term insurance to really understand what our options were, which is why we want to make sure that you know term insurance is just death benefit.
Right.
I actually call term insurance death insurance. And
That's a good name for it.
whole life insurance allows you to have living benefits, allows you to utilize the policy while you're living, and also provides insurance to your family should something happen to you.
Yep. So I know it's a lot to take in. In the event that you don't have any insurance, the best time to get insurance if you don't have any is right now, because this is the youngest you'll ever be, and hopefully you are in a good place health-wise to where you're able to do so.
True. And last thing that we'll leave you with is, again, the affordability. Make sure that you do your research because a lot of people say term insurance is super affordable, which it is. Whole life can also be affordable. You just have to know exactly what it is that you want, and you have to speak to an agent who understands your financial goals that you're trying to meet. So don't let the assumed cost deter you from getting one product versus the other.
Right. Because think about it, if you outlive your term policy, you just spent $50 a month for 20 years on something you didn't even use.
How about them apples? But yeah, we're just providing the facts. So thank you guys so much for watching us. So
Thank you.
If you like what you see, subscribe to our YouTube channel and also follow us on Facebook and Instagram at wealthnation.io. So own your own lifestyle or someone else will. Have a great day.